Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody is not aware of this, this is a journey of an investment of $1,000 for a return of $1 million over a period of 3 years using a strategic or compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be looking at a potential smoking gun against FINRA, and this is going to include some legal mistakes and significant errors made in the run-up to the U3 halt. So stay tuned for that. Before we get started, let's have a look at what's happening in the market. So headline here from Reuters, in terms of the week ahead, the last Fed hike tends to aid stocks, but some have doubts this time. So there is some potential good news here, and that is in terms of the odds of an interest rate hike coming up this week. We're looking at 97% in favor of no rates being increased. So that's good news. It's likely to be also around about 60% chance that the rates stay at current levels all the way up to December. So hopefully good news for the markets. And before we get started, another shout out here to Unusual Wales in terms of the breaking news that they shared. Ro Khanna has introduced a new reform plan that bans stocks for trading Congress and spouses, bans Congress from lobbying after, and also looking at a 12-year limit for Congress, ban lobbyists and PAC's donations. He directly mentions Unusual Wales. However, I think Ro Khanna is definitely going to fail in his brave bid. So I'd like to start by giving a shout out to Sentinips, who is one of the Discord members, and he was the one who initially carried out a significant amount of due diligence in terms of this potential smoking gun. And I think it could be more than one smoking gun. So I'm going to share one of his statements here in the Discord, and he states here, based on FINRA Rule 6490 literature, FINRA does review and approve corporate actions in that if they are deemed deficient. So keyword there, we're going to be looking at that later on. They can be denied and never posted to the FINRA's daily list. FINRA did not deny the MMTLP corporate action and posted it publicly, deeming it efficient. The U3 halt was in contradiction to that approval by posting a company action deemed deficient would be denied, and issuing company would be notified that they would need to redo it. And emphasis here, the only reason he thinks that this is why this happened is that, and in terms of the halt of MMTLP, they deemed it deficient so that it would be cancelled and never allowed to trade. So we are going to look at the evidence for that, but let's start by having a look at the highlighted rule, which is Rule 6490. So this states that FINRA's process for reviewing corporate action submissions, including those required under SEC Rule 10b-17, FINRA does not initiate, approve or conduct the underlying corporate action that the issuer is taking. FINRA's role is limited to reviewing and processing the submission, announcing the corporate action. So that's very important. But what I'd now like to do using some AI technology here is look at how is FINRA's Rule 6490 used. So this is a rule that they are obviously are used to process and disseminate corporate action announcements to broker dealers and other market participants. Corporate actions are events that affect the rights of shareholders, such as dividends, and that is what is certainly applicable in our situation. Also it's stock splits and mergers. So with regards to the rule, it helps to ensure that all market participants have timely access to information about corporate actions. The information is essential for investors to make informed decisions about their investments. So the emphasis I would like to point out here is timely access. Were we aware of the dates? Were FINRA aware of the dates? And I think the clear answer there is yes, we were well aware in a significant amount in advance of the dates. However, if you remember, FINRA halted, added in the U3 halt suddenly because of dates, but one thing they certainly cannot argue is the dates were provided last minute. That is certainly not true. So in terms of examples of how the rule is used, or should we say should be used, the company must notify FINRA of the dividend at least 10 days prior to the record date, and FINRA then disseminates the dividend announcement to broker dealers and any other market participants. So FINRA were notified of well in advance, 10 days before the record date, so they certainly knew the dates. So if they knew the dates, then why the sudden U3 halt? So certainly seems very, very suspicious here with regard to the applicable use here of FINRA Rule 6490. So something seems fishy in this one being applied. What now I'd like to do is have a look at Rule 6490. So again, another shout out here to Sensinips in the Discord who posted, I just found something new, check it out. The Rule 6490 deficiency criteria number 5 and Rule 6440 discretionary for an extraordinary event halts number 6 are identical, meaning they could have enforced the deficiency before the halt, and then enforcing the halt makes the deficiency valid if they followed the procedure. So the implication here is if they have actually followed the rules properly and used the correct rule, they could have actually got away with this, but they didn't, and it certainly looks like they mixed up the laws, they mixed up the rules, and they made mistakes. So now we are looking to highlight these mistakes. So in terms of the Twitter post here, MMTLP caught FINRA, they used Rule 6440 Section C, number 2, number 6, 0.02, number 6, sorry, to justify the U3 halt, but failed to reread the Rule 6490 Section D3, number 5 for a deficient corporate action, with them being identical. One being enforced means the other is enforceable, and had FINRA followed this the FOIA request that got the emails released confirms the high-ranking personnel at SEC and FINRA knew. This has got signs obviously here of extreme incompetence, gross negligence all over it, and obviously in the opinion of Sensinips, someone at FINRA intentionally omitted deficiency to kill MMTLP trading. And also what is crazy is that they use Rule 6440 Section C at 0.01 as one of the justifications for the U3 halt, which is identical to 6490 D3.5 to determine deficiency. They messed up and were so focused on getting away with it, they forgot to read the deficiency criteria. So we're going to have a look at that as well. So let's have a look at the highlighted section here in yellow in terms of deficiency determination, and it states here, in circumstances where an SEA Rule 10B-17 action or other company-related action is deemed deficient, the department may determine that it is necessary for the protection of investors, the public interest, and to maintain fair and orderly markets. So that was, I think that's from what they have stated. But what I'm going to do now is look at when can the SEC Rule 10B-17 be deemed deficient. So using this rule, if we look at AI technology, and it states here, it can be deemed deficient if an issuer fails to provide timely notice of a corporate action to FINRA. Notice must be provided at least 10 days prior to the record date of the action. And in terms of the Rule 10B-17, it could be deficient if the notice is not provided at least 10 days prior to the record date. Not applicable. The notice does not contain all the required information. Not applicable. The notice is inaccurate or misleading. Not applicable. The notice is not provided in the required form. Again, not applicable. The notice is not provided to the correct person or entity. Again, not applicable. What I'm now going to do is refer back to the FINRA FAQs, looking at reasons why they halted trading in MMTLP. So number 1, what they stated here is, why did FINRA halt trading MMTLP? And they said, we are permitted under the rules to impose a quoting and trading halt in an OTC equity where FINRA determines that an extraordinary event has occurred. So basically, guys, what they are doing is saying MMTLP was going to lead to or was involved in an extraordinary event. So number 2, they stated here, why did FINRA halt trading on December the 9th if shareholders as of December the 12th were entitled to receive the next bridge distribution? And what they are saying is because securities transactions typically must settle within 2 business days in accordance with SEC rules. So let's now have a look at this FINRA trading and quotation halt for metamaterials, which I'm sure many of you have seen. But the thing I'd like to focus on here in this release is the highlighted section in yellow, where it states here, pursuant to Rule 6440A Section 3, FINRA has determined that an extraordinary event has occurred. So let's remember that. So that's the language that FINRA are using. So if we look at AI technology with regard to this rule, so Rule 6440 Section A Part 3 does allow FINRA to impose a trading and quotation halt in an OTC equity security if FINRA determines at its discretion, obviously with regard to this extraordinary event. So they are saying that an extraordinary event has occurred. That's what they said. So the circumstances of an extraordinary event would include a material news event that has not been made public. Again, not applicable. A significant change in the trading volume or price of a security. Again, that in itself would not be reason to obviously for the U3 halt, because that was not something that was going to harm investors. That's just a normal part of the trading. So it's not with regard to a recession or something like COVID-19, for example. So it wasn't that kind of situation. A cybersecurity attack, again, I know they did have problems with their coding issues, but that's not applicable here. A natural disaster, again, not applicable here. A suspected case of insider trading or market manipulation, as far as I'm concerned, I don't think that's applicable as well, unless FINRA will come out later on and say that is the case, but we were not sharing the information. But let's have a look at the history now of the FINRA's use of Rule 644A Section 3. So how often have they used this rule? So what's interesting here is they've used this rule on a number of occasions in response to the following events. So these are the events that are regarded as extraordinary: September the 11th, 2008 financial crisis, COVID-19, the January 2021 attack on the US Capitol, and now MMTLP apparently belongs in this group. So again, they are deeming little old MMTLP and the 64,000 investors belonging in September the 11th, 2008 recession, COVID-19, and obviously the January 2021 attack. So I think this is a huge mistake by FINRA to put us in the category of those extraordinary events. So it states here, important to note that FINRA does not use this rule lightly. Well, it looks like they have used it lightly here. Trading halts can have significant impact on investors, and FINRA only imposes them when it is absolutely necessary. Well, I think in this case it was absolutely necessary for FINRA to protect certain investors. So let's go back to the term deficient corporate action, again highlighted by Sentinips earlier, and this is with regard to Rule 6490 Section D Part 3 Number 5, and how is this rule used for a deficient corporate action? So in effect, what we're basically saying here is that FINRA did have the opportunity to use this rule and obviously halt the trading of MMTLP instead of halting it with the U3 halt. So I think FINRA have missed a trick, and if they did use this, then basically we would have had a situation where the U3 halt wasn't necessary, but they could have achieved their objective. But why was this not used? So you could say, a cynic would say they wanted to trap the investors. And a cynic might also say that FINRA are completely useless and misunderstood the rule. So let's have a look at this rule. It states here, FINRA may refuse to process a corporate action announcement if the corporate action is deficient and FINRA determines that refusing to process a corporate action announcement is necessary to protect investors' public interest and the maintenance of fair and orderly securities market. So in other words, they could have basically said, these days don't work, sorry, not approving it. What they did instead is basically issued the U3 halt and said the dates don't work, and in effect trapped a lot of investors. So corporate action can be deemed deficient if it does not comply with all laws, regulations, or if it is not in the best interest of investors. So that could have been applied in the MMTLP situation, it's not in the best of interest of investors because it would have led to uncertainty in clearing. That's all they had to use. It's unfair and discriminatory to shareholders. They could have said that. It's likely to harm investors, and if they'd have used this rule properly, their U3 halt would not have been necessary. What I'd now like to do is have a look at the corporate action, and the question here is, does FINRA initiate, approve or conduct the underlying corporate action of a company? So the answer is no. FINRA does not initiate, approve or conduct the underlying corporate action of a company. Corporate actions are initiated and conducted by the company itself and are subject to approval by the company's board of directors and shareholders as required by law. So let's have a look at the FINRA FAQ. So FINRA's role in the corporate action, and they have stated here, in any event, FINRA does not initiate, approve or conduct the underlying corporate action that the company is making, and the company itself is responsible for making the corporate action and complies with all the applicable laws and regulations. So it looks like here they are talking the talk. They are obviously complying with what should have happened. So we shout out here to Sensi again on Twitter, who stated has the power not to grant them. So for MMTLP corporate action, they must have reviewed it and deemed it efficient enough to post it publicly, allowing the spin out to move forward, making the U3 halt in direct contradiction to their approval and public posting. So a tremendous post there and tremendous point. FINRA is 100% responsible. The SEC Gov is also 100% responsible for not doing anything about it. So attention there goes to Gary Gensler for inaction. MMTLP should have been deemed deficient, we've just looked at that, and sent back to the drawing board, not halted. There is no other reason for this other than they wanted to kill MMTLP and not let it trade. Let's now have a look at the press release from Meta Materials, who look, and what, surprise, what they're saying here is FINRA has revised the corporate action for exchange of Series A preferred shares. And the final thing I'm going to be looking at is the Exchange Act Section 10B. So again, another shout out here to Sensi, who stated here, can you proofread the final information before it's posted on Twitter? So I have managed to have a look through that, but I'm going to just share with you the opinion of Sensi, and he states here, on December the 9th, 2023, I think that should be 2022, enforced a U3 halt, stopping the trading as it was about to complete its spin out with its final days of trading. FINRA did not attend the requested MMTLP meeting. Again, that's as confirmed by John Berder. And FINRA said, FINRA Rule 6440, 6490. They're talking about trading and quotation halt in the OTC market. They're talking about processing of company-related actions, and we're also looking at Section 10B of the Exchange Act. So we also have the FINRA letters that were released by the FINRA themselves, looking at Rule 6490, which we've also looked at. And let's now have a look at the opinion. So in his opinion here, he states, FINRA was so determined to halt this and justify it that they cherry-pick certain information while leaving other pertinent information out, violated federal securities law, Section 10B and 10B5 of the Exchange Act. We'll have a look at that shortly. And had FINRA followed procedure, then MMTLP would have been deemed deficient and the halt would have never taken place. FINRA either made a huge mistake or someone had it intent to get MMTLP to a point where the U3 halt could be utilised to freeze trading. So we know they could have done it without the U3 halt. We've just demonstrated that. So let's now look at potential violations of the Exchange Act Section 10B. So this can be violated in a number of ways, but the most common violations include making untrue statements or omitting state material facts, and this includes failing to disclose important information. So are FINRA guilty of this Exchange Act Section 10B? I will let you decide. And finally, if you'd like to get a copy of our weekly watch list as well as access to the challenge, you can join us. Details are in the description below. Thank you very much for watching. Please stay tuned.